Welcome to the 5-Minute Prime Podcast. Quick, actionable tips to master personal finance and real estate investing. In just 5 minutes a day, we'll help you build wealth and achieve financial freedom. Hey, Prime investors, Martin Maxwell here. Welcome back to the 5-Minute Prime Podcast. For about 3 years now, the story on Storm State real estate has been one word: run. Insurance is a crisis, hurricane season is a loaded gun, get your money out of Florida and the Gulf before the next big one. And a lot of good operators sold good properties on exactly that headline. Then 2026 showed up and quietly called the bluff. NOAA's outlook for this Atlantic season? Below normal, a 55% chance of a quieter than average year, with El Niño building in the Pacific to keep a lid on things. And Florida, the poster child for the entire insurance crisis, just approved its first rate cut since 2015. So today it's Expand Week, and we're asking the scaling operator's version of the question: is the Storm State insurance crisis over? Should you lean back in? Stick with me, because the real answer is more useful than either the panic or the all clear, and it lives in a number that doesn't care what the forecast says. Let me start with how big the Florida turnaround actually is, because it's genuinely remarkable. Back in October 2023, Citizens, that's Florida's state-run insurer of last resort, the place you land when no private company will touch you, had 1.42 million policies. It had basically become the largest home insurer in the state, the opposite of a healthy market. Fast forward to the end of 2025, Citizens is down to about 385,000 policies. That's a 73% drop from the peak, the lowest count in its history. In a single year, more than 500,000 policies got moved back to private carriers through what they call depopulation. And 17 new insurance companies have entered or re-entered the Florida market since the reforms. That's not a rounding error. That's a market coming back to life. After the legislature killed off the litigation games, the inflated roofing claims, and the assignment of benefits abuse that were bleeding insurers dry, the private capital came back and the competition came with it. And for the first time in a decade, Citizens approved a decrease in the average premium. About 2.6%, its first cut since 2015. So if your entire thesis on Florida was uninsurable, get out, that thesis is now 2 years out of date. The reform worked. Don't sell a Tampa rental in 2026 on a 2024 headline. You may have already felt this in your own mailbox. If you own in Florida, you've probably gotten what's called a takeout offer, a private carrier writing to say they'll assume your Citizens policy. 2 years ago, that letter was a nuisance you'd toss. Today, open it. The takeout is often the same coverage, or better, at a lower premium. And it's the single clearest signal that the private market wants your business back. The companies that wouldn't return your call in 2023 are now competing for it. Now, here's where I pump the brakes, because the all clear is just as dangerous as the panic. A below normal forecast does not cut your premium. Let me say that again, because it's the number that bites. Your insurance bill is not priced on this season's weather. It's priced on two things: reinsurance, which is the insurance that insurers buy, set in a global market that doesn't care whether your specific county gets hit, and replacement cost, which is what it costs to rebuild your property at today's materials and labor prices. Both of those have been climbing for years, and neither one falls because NOAA says we'll have a quiet August. I've hammered this point on the show before. Insurance is a structural cost, not a weather event, and that's the whole game here. A calm 2026 is not a cheap decade. Your premium can rise in a year where not a single storm makes landfall, and most of you have already seen exactly that. And the Florida good news? It's Florida specific. Florida passed real reform. Louisiana largely hasn't. Pockets of Texas, the California wildfire zones, those markets are on their own timelines. So Storm state insurance's healing is true in the one state that fixed its legal system and not automatically true anywhere else. You underwrite the state's reform status, not the region's weather. Here's why this matters for your returns. Insurance is a line item that sits right on top of your cap rate. Every extra $1,000 a year in premium comes straight out of your net operating income, which means straight out of your yield. Remember the +5 rule. Your cap rate has to clear the 10-year treasury by at least 5 points to be a green light. A bloated insurance line is one of the fastest ways to push an otherwise fine deal below that floor. So insurance isn't a side worry, it's a number in the middle of your underwriting. And here's how fast it bites. Say you're buying a $250,000 rental and the insurance quote comes back at $4,200 a year instead of the $1,800 you'd penciled in. That extra $2,400 comes straight off your NOI. And on a $250,000 property, that's nearly a full point of cap rate gone to one line item. That one number is the whole difference between a deal that clears your floor and one that doesn't. So what does the scaling operator actually do with all this? 3 moves. First, if you own in Florida, requote your renewals. You now have 17 carriers that didn't want your business 2 years ago and might want it today. The single highest ROI hour you'll spend this month is pulling your storm state policies, finding the renewal dates, and getting 2 fresh quotes against the new competition before you auto-renew. People are leaving real money on the table by rolling over a citizen's policy out of habit when a private carrier would now write them for less. But one hard caveat, because this is exactly where operators get burned. Not all 17 of those carriers are equal. A few are thinly capitalized newcomers, and a cheap premium from a company that can't actually pay your claim after a storm is worse than a higher one from a company that can. So don't shop on price alone. Check the carrier's financial strength rating, the Demotech or AM best grade, before you move your policy. What you want is a strong carrier at a fair price, not the lowest number on the page. Second, re-underwrite, don't retreat. If you panic, sold a cash-flowing Florida rental in 2024, that's done. Don't compound it by writing off the entire region now, but don't lurch the other way and pile into storm state exposure because rates tick down either. Size it deliberately. Know what percentage of your portfolio's NOI is exposed to a single hurricane track and decide that number on purpose. Third, bake the real premium into the next deal. Not last year's premium, not the seller's premium, like a fresh quote on the property you're actually buying. Run through the +5 rule. If the insurance line pushes the cap below your floor, it's a no matter how quiet the forecast looks. The forecast is a headline. The premium is the math. And one honest word for those of you already heavy in storm states. Feeling whipsawed by all of this, you weren't wrong to be there. The reform genuinely improved the picture, and the operators who held through the worst of it are the ones who get to shop 17 carriers now instead of begging citizens for a policy. This isn't about regret, it's about repricing. So here's your challenge this week. Pull every storm state policy you own, line up the renewal dates, and get 2 fresh quotes from carriers you haven't used before. In Florida, from that new crop of 17. Then do the then what? Take whatever number comes back and drop it into your next acquisition's underwriting. Against the +5 rule. If the new premium clears your floor, you've got a green light the panicking crowd is too scared to take. If it doesn't, you just dodged a deal a quiet forecast would have talked you into. Now, I'm not your insurance agent, and your premium, your carriers, and your county are all going to come back different. So take this as the framework, not a quote. But the framework holds. The crisis headline and the all clear are both lazy. The premium is the truth. Requote it, underwrite it, and let the math decide whether you lean in. I'm Martin Maxwell. This has been the 5 Minute Prime Podcast. I'll see you next episode.